The spaghetti chart nightmare. The pain point. Have you ever opened your trading platform, looked at a price chart, and immediately started drawing line after line until your screen looked like a giant web of colorful spaghetti? If you have any trading topics you'd like to discuss, just press 2 inches. Comment, I'll clear things up for you. You draw 10 different trend lines, 15 support levels, and 20 resistance lines until you can barely even see the price candles anymore. You tell yourself, yes, I have finally found the absolute bottom of the market. Now I know exactly where to trade. But then, the moment you enter a trade based on one of your 50 lines, the price completely ignores it. It shoots right through your level, hits your stop loss, and leaves you feeling incredibly stupid and confused. You look at your messy chart and realize you have no idea which line actually mattered. This overload of visual data does not help you. Instead, it causes massive confusion, emotional stress, and eventually, a blown account. In this video, I'm going to show you exactly how you can draw support and resistance the correct way, so that your charts never look like a chaotic mess again. Support and resistance is the single most important technique to master in trading. When drawn correctly, these levels make your chart cleaner, simpler, and much easier to read. I will teach you the simple rules to identify the only lines that actually matter for your trades. Please hit the like button, subscribe, and let's get started. Part 1. Support and resistance in plain English. Before we start drawing, let's explain support and resistance in extremely simple terms. You do not need a degree in finance to understand this. Think of support as a solid floor in a house, and think of resistance as a solid ceiling. When you drop a rubber ball inside a room, what happens? The ball falls down, hits the floor, and bounces back up. The floor stops the ball from falling any lower. On a trading chart, the floor is your support. It is a price level where buyers consistently enter the market, preventing the price from dropping any further and pushing it back up. Conversely, when you throw that same rubber ball upward, it hits the ceiling and bounces back down. The ceiling stops the ball from rising any higher. On your chart, the ceiling is your resistance. It is a price level where sellers enter, stopping the price from climbing and pushing it back down. Once you can identify these key floors and ceilings, you have a massive advantage. These levels represent high probability areas where the price is likely to turn around. This means you can wait patiently for the price to reach these zones, and then enter trades with very low risk and very high potential rewards. Yet, 99% of retail traders still get this wrong because they do not follow the basic rules of drawing them. Part 2. Rule 1. The touch rule. Multiple rejections. Let's reveal the first secret rule of drawing valid support and resistance. Multiple rejections. A price level is only considered a strong floor or ceiling if the market has visited that exact level multiple times in the past and has been rejected or turned around from there. The more times the price bounces off a level, the more reliable and stronger that level becomes. Let me show you what I mean on this chart. Look at how the price drops down to this specific horizontal area and immediately bounces back up. It does this not just once, but 3 separate times. Every single time the price touches this zone, the buyers step in aggressively and push the price away. This gives us multiple clean rejections, confirming that this level is a very strong, highly reliable support floor. Now, look at the top of the chart. We can see the exact same behavior happening. Every time the price climbs up to this specific horizontal line, it hits a wall and reverses downward. It does this on 3 separate occasions, creating multiple clean rejections at the top. This confirms that this level is a highly reliable resistance ceiling. By only drawing lines where you see multiple rejections, you instantly eliminate 60% of the useless lines on your chart. Part 3. Rule 2. The fast move rule, drastic movement. But what if you look at a chart and you do not see multiple rejections yet? What if the price has only touched a level once? This brings us to our second rule, drastic price movement. A single price turning point is still considered highly valid if the price shot away from that level extremely fast and aggressively. A violent, rapid price move tells us that big institutional players were highly active at that exact price. Look at this example on the screen. The price was climbing upward slowly. Suddenly it hits this specific peak and drops down incredibly fast, forming a massive, long red candle. Even though the price has only touched this high point once, the fact that it reversed so aggressively and traveled a huge distance away tells us that this is a highly important resistance ceiling. The same rule applies to the bottom of the chart. If the price drops down and then suddenly rockets upward with massive green candles, that single bottom point is a highly valid support floor. Why? Because the extreme speed of the reversal proves that a massive amount of buying orders were waiting at that exact price. When the price eventually returns to this level in the future, we expect a very strong reaction. Part 4. Rule 3. The flip rule, role reversal. Our third rule is one of the most powerful concepts in all of price action trading, the flip rule. This rule states that a support level can flip to become resistance, and a resistance level can flip to become support. In simple terms, once the ball breaks through the ceiling, that ceiling now becomes the new floor. Once the ball breaks through the floor, that floor becomes the new ceiling. Let me show you how this looks on the chart. Here, we can see that this horizontal line was acting as a strong resistance ceiling. The price hit it multiple times and bounced down. But eventually, the buyers gather enough strength and push the price completely through the ceiling. Once the price breaks above this line, the old resistance ceiling is now flipped. When the price pulls back down, this exact same line now acts as a new support floor. This role reversal happens because of market memory. The big players who missed the breakout are waiting for the price to return to this broken level to enter their buy orders. When you see a level that has acted as both support and resistance in the past, you have found one of the most high probability key levels on the entire chart. These flip levels are incredibly reliable for finding precise, low-risk trade entries. Part 5. Rule 4. The nearness rule nearest to current price. Now, let's talk about the ultimate rule that will save your chart from clutter. The nearness rule. This is the rule that 99% of traders ignore, which is why their charts look like a mess. The rule is extremely simple. Only draw levels that are closest to the current trading price. You do not need to draw lines from 3 years ago that are miles away from where the price is trading right now. Look at this messy chart. This trader has drawn support and resistance lines all over the screen, spanning over several months. Yes, these lines might have been valid in the past, but they are completely useless for a trade you want to take today. All these extra lines do is distract your eyes and confuse your decision-making. If you want to day trade or swing trade, you only need to focus on the immediate neighborhood of the price. Simply look at where the price is trading right now. Then, look slightly above the current price to draw your nearest resistance ceiling, and look slightly below to draw your nearest support floor. You only need 2 or 3 high-quality lines on your chart to find a highly profitable setup. Any line that is too far away should be completely deleted. A clean chart leads to a clean mind, which leads to consistent trading results. The clean trader's promise. Drawing support and resistance is not about how many lines you can draw. It is about drawing only the lines that actually matter. By following these 4 simple rules, multiple rejections, drastic moves, flipped rolls, and nearness, you will have cleaner charts and a massive edge over other retail traders. If you found this simple guide helpful, please hit the like button, subscribe to the channel, and comment below with your thoughts. Stay disciplined, keep your charts clean, and I will see you in the next masterclass. If you have any trading topics you'd like to discuss, just press 2 inches, comment, I'll clear things up for you.